Well, QE does wonders for equity prices and other asset prices, and that has not changed, at least not for now. Whether it will do any good for the real economy remains to be seen, because the effects of QE in Europe could be different from those, let's say, in the United States, for instance. Because in Europe you have a lot of small and medium-sized enterprises who depend on bank credit, and any amount of QE cannot necessarily force the banks to lend. So I think that's one of these things. They don't finance themselves via the bond market. But QE was probably necessary at this point in time, because you have to look at, as you say, the political situation as well. We had in Greece the win of the Syriza party, and that's going to be very interesting over the next few weeks, how that's going to pan out. It's a bit too early to tell, but all we know is that for the last 30 years, the 40 level in the oil price prior to 2002 was always the top. So that's where oil prices went and bounced back down. And this time around it seems to be a bottom. So it's a bit too early to tell, but we would like to see some consolidation around here, maybe some base building to take place over the next few months. And then we'll see what happens in the second part of the year. The key will be whether in the United States oil production will actually go down. This has not happened yet in the oil shale industry, but the rig count, the oil rig count in the US is down about 20%, and that may drop further, because historically usually the number of rigs get cut in half from the top if you have a oil price decline like this. So that's still ahead of us, and we have to see how that plays out in the second half. And that's if the oil rig count comes down, production drops in the US, then we could see oil stabilizing at somewhat higher levels than what it is now. You see, the thing is this: we have very strong deflationary pressures in the world economy. It's actually amazing to say this, because you have had the global central banks pumping $4 trillion worth into the financial markets since 2009, and yet we don't have inflation. We actually have the opposite. We have deflationary pressures in many economies, and that of course puts downward pressure on commodity prices. Commodity prices of course contribute to the deflationary pressures, but it shows a lack of demand. It shows a lack of growth, of traction that these policies have. That's why I'm saying QE has done wonders for asset prices, but let's say for the real economy, the results are meager at best.